Now, it has been some time since I actually created a video dedicated to SOFI, and the last time I believe I did that was back in early August. Now, during this time, SOFI stock has climbed about 20% from the low $20 range to where it is today in the $26 range. And so recently, we did a live stream where I answered some of your questions around SOFI and discussed the valuation in 2025. And the reason why I did that was because during the recent Goldman Sachs Communicopia, Anthony Noto actually revealed to us some key pieces of information to help us understand what SOFI's future looks like through the eyes of the management. And so we have taken what the management has told us and tried to project that out to find SOFI's new valuation in 2025. And what we're aiming to do in this video is to add a little bit more color to that discussion in the live stream and to perhaps give you a concise understanding of what is to expect for SOFI for the rest of 2025 and going into 2026. And so with that, let's dive in. In the recent fireside chat with Goldman Sachs, Anthony Noto started off by reminding investors just how well SOFI has done. Now, if you have been a SOFI investor for some time, you would know that, early on in this year and towards the end of 2024, they came under a little bit of stick for basically underperforming Robinhood, and people were getting frustrated that it seems like SOFI's share price wasn't moving. However, Anthony Noto pointed back to the fundamentals and showed that SOFI has been executing over the last 3 to 4 years. And if you use the rule of 40 as a measure for the company, they have consistently performed over 50 points in the rule of 40 over the last 16 quarters. Now, he attributed that to, growth in member count as well as an increased product adoption. So they are trying to drive member growth at least 30% and product growth of at least 30%. And this is very much in line with how we have, all along done our valuation. Now, if you remember, the third lever that SOFI can pull in order to drive revenue growth is to monetize the existing members. And that is exactly what he spoke about. You see, after driving member growth as well as product adoption, thereafter, follows the monetization of the existing members, and he has basically shed light over some of the areas that SOFI has planned to invest in. Now, the first thing he actually spoke about is SOFI Pay, and basically what this is a product that gives a SOFI member the ability to pay anyone anywhere in the world. Now, that is the long-term goal, and so how this will actually start off is that using a Bitcoin network, people will be able to send US dollars to foreign countries, and then this will be then converted back into fiat on the back end for the receiver. So over time, they plan to add a SOFI stablecoin into the ecosystem as part of SOFI Pay, and as well as many other aspects of their business. And so this brings Anthony Noto to the second aspect of SOFI's investment into the business for the next couple of years, and that is basically the ability for consumers or for members to buy, sell, and hold cryptocurrency. Now, if you remember, when they actually got the bank charter, they were made to, dissolve this aspect of their business. However, now they are bringing it back. And when they dissolve this aspect of the business, one of the things that was actually affected is the products per member number that actually influences the valuation. And so being able to add this back into our valuation will definitely be accretive to the share price of the company over the long run. Now, how do we think about this? Now, very simple. Anthony Noto has already given us very clear indications that 50% of SOFI's members would be interested to invest in cryptocurrencies with them. Now, if you think about it, SOFI have around 12 million members on their platform. So 50% of that would actually be around 6 million members. The only caveat I have over here is that out of these 6 million members, it is likely that at least, 1 to 2/3 of them already have some sort of relationship with SOFI through SOFI Invest, and it doesn't necessarily mean a new product that they it doesn't necessarily mean that if they are bringing their cryptocurrency into SOFI's ecosystem, that it would be count as a new product for SOFI, right? So I think in terms of the new products being added, perhaps, if 6 million members bring their cryptocurrencies into SOFI's ecosystem, perhaps we are going to see an increase of around 2 to 3 million new SOFI Invest accounts, with the rest of them already having an existing SOFI Invest account. But I think more importantly, he says 60% of the people that they surveyed that were non-SOFI members want to custody their crypto with a licensed national bank, which basically SOFI is referring to themselves, right? So in that case, it means that if you use this assumption that 60% of every non-member wants to custody their cryptocurrency, with a licensed national bank, then it stands to reason that over a long enough time horizon, 60% of every new member will not just open a relationship with SOFI based on the direct deposits, based on lending and things like that. They will open a primary relationship with SOFI through cryptocurrencies as well. So which means that when someone comes onto SOFI, they could easily come on with already two products rather than just one product, and then SOFI having to cross-sell them much later on in the life cycle of the customer. And I think that really reduces the cost to acquire a customer, or the time it takes to return the customer acquisition cost. And I believe if they can actually drive that over the long term, as they try to expand their product adoption across the member base, then it's going to be able to give them more fuel to continue driving this growth and continue keeping up this pace of growth. Which is why I think it's always important as a SOFI investor to understand that SOFI is not one of these companies that are always aiming for explosive growth. Of course, they're not going to turn down explosive growth if the opportunity is there, as we have seen with the loan platform business. But how SOFI operates their business is that they want to be able to drive a very sustainable number, which in this case is 30% member growth for the foreseeable future. And I think as an investor, that is something that we have to appreciate about this company. So on top of SOFI Pay, on top of cryptocurrencies, the third thing that he spoke about is launching SOFI Plus. Now this basically ties in line with what we were talking about earlier, increasing the adoption of new SOFI products. Now usually I would think that a member comes onto SOFI and basically adopts just one product, and so because of that, it takes some time before you can cross-sell. Earlier on, I was saying with cryptocurrency, it could be that members come on with now two products, right? Because they not only have a direct deposit relationship with SOFI, they could easily bring their crypto on board and start using SOFI Invest. So that's two products for any members that come on board. And so what SOFI Plus is an addition of that. It's another way for SOFI to reach out to new members and to get them to deepen that relationship with them, not just through crypto, right? So SOFI Plus basically is a subscription product where SOFI offers their SOFI Plus members preferential rates and basically more perks, right, to become a SOFI Plus members. And they can sign up for this either through a subscription. I believe it's around $5 to $10 a month. And then on top of that, another way to actually get into the SOFI Plus ecosystem is to set up a direct deposit relationship with them. So what they have told us is that 90% of new SOFI Plus members are actually existing members. And out of this 90%, right, 75% of them are taking out another product after they launch SOFI Plus. So you can see what SOFI is doing is to actually try and intentionally drive up this product adoption across the existing member base and to allow new members to come in via more than one product, right? So in the past, what we are seeing is that one member comes in with one product and then there is a future cross-sell. But what we are seeing now is that the potentially new members can come in with two products. Not only do they come in with two products, existing members within a very short period of time tend to add on a second or third product into their own ecosystem and basically deepen their relationship with SOFI, right? So I think on top of that, I think what is very fascinating to me, and this is not something that has been talked about a lot, I guess because this is a very old school SOFI product, right, which is SOFI Money. Now, Anthony Noto did mention during the Goldman Sachs fireside chat that, they're going to improve SOFI Money. Now, he did not shed a lot of light into how this would look like or what that would entail, but he says that we'll offer a product sometime in future that is actually even better than SOFI Money. That's another version that adds even more value on top of what we are doing with SOFI Money. So this is something we want to look out for, and it's another chance for them to really deepen that relationship with the consumer. But after talking about member growth as well as an increased product adoption, I think the one aspect of SOFI's business that has gotten investors the most excited, and I think you can hear that excitement in Anthony Noto's voice as well, is SOFI's re-entry into the crypto space and how they can innovate in that space and offer even more values to existing members. So one of the things that Anthony Noto has been very excited about is developing his own SOFI stablecoin. Now, this will grant people the ability to use SOFI Pay to pay at retail, and basically it will also motivate merchants to accept SOFI stablecoin because they end up not having to pay that 2 to 3% interchange fees that they are currently paying. And it's not just saving on the fees. SOFI can actually, because they have this SOFI stablecoin, they can actually deposit that in their Federal Reserve banking account, earn a 3 to 4% interest rates, and then share some of these interest rates as rewards with some of the merchants to encourage them to adopt SOFI stablecoin as one of their payment options. And so I believe this re-entry into the crypto space by SOFI actually goes beyond their previous business model of just allowing people to custody their crypto with SOFI. They plan to do so much more, and the development of this SOFI stablecoin will allow them to integrate this into many different aspects of their business. Now, Anthony Noto has also pointed that out himself. He says that this SOFI stablecoin can be integrated to every part of their business, including payment capabilities through SOFI Pay. That is what we have just spoken about. Lending capabilities, and he has spoken about this previously through asset-backed lending using crypto, investing capabilities. And I think what people really miss out is how that actually increases their capacity in their tech platform, because their own tech platform, Galileo, has to be able to build the back-end infrastructure to support all these crypto payments, to support all these new crypto products that SOFI are planning to launch. And what that means is that as they build out these infrastructure for SOFI, other companies who want to compete in the space, seeing how fast the technology are moving, they will not have the time to actually go and build out the backend infrastructure themselves. And then likelihood is, they will come to Galileo and they have to adopt Galileo as their back-end system, and that will drive up further adoption of the tech platform. And that is something that people, when they just get excited about crypto, they actually forget about the other exciting part of SOFI's business, which is their tech platform. So to me, the faster SOFI innovates on their front end in the financial services side of the business, that also means that they actually are increasing their capacity to serve a wider group of audience within their back end in terms of their tech platform capabilities. So, like I said, they are going to build out their typical buy, sell, and hold crypto. However, they plan to do a lot more than that through the various aspects of their business. And I think we can really see Anthony Noto and his team really driving innovation in this area. And the reason why SOFI or Anthony Noto sounds so confident over their ability to deliver in the crypto space is because, they believe that one of the things that used to, in the sense, the market viewed it as holding SOFI back, which is their banking license, has actually become a moat for the company, because with the OCC's announcement back in April, that means that SOFI now has the best license to operate within the crypto space. Because what Anthony Noto has told us is that right now, what you're going to see, or what we're going to see over the next couple of months, is a lot of these crypto companies or crypto-centric companies that offer stable coins or offer the ability to buy, sell, and hold crypto. They will start to try and apply for these OCC licenses. And, in the end, that they'll only be able to apply for a non-depository insured trust. So this will basically limit what they can do, because they will not be able to accept or receive deposits with this license. However, this is not true for SOFI. That will not limit what they can do. They have insured deposits as an OCC licensed bank. And so to him, he sees that as a huge advantage. And it's basically something that gives people a safety net, especially, entering into an asset class as volatile as crypto. And I know that for a fact, because there are a lot of people in Singapore who are open to actually owning crypto. But if you ask them to custody it on a platform or on a brokerage where it is not regulated by the Monetary Authority of Singapore, MAS, they tend to be a little bit more skeptical and a little bit more worried. So I do think that the fact that SOFI has this, licensed national bank charter is actually a moat for the company, especially when it comes to making people feel comfortable custodying their crypto with them, right? Because there won't be this concern of, oh, what if this brokerage goes bankrupt and then I lose my crypto? And so, like I said, and Anthony Noto has also alluded to this, that the benefit goes beyond just, building out their financial services within the crypto space. It is also when they go and, market their tech platform capabilities. A lot of these other companies that may want to engage Galileo to build out their back-end crypto infrastructure to allow buy, sell, and hold cryptos and things like that, SOFI can actually go to them and offer their banking as a service and basically, become the holding company or the custodian bank for some of their crypto assets. And so the reason why companies are likely going to feel safe with SOFI, like I said, it's because they are a nationally chartered bank and because they are under regulatory regime. So people feel safe custodying their crypto with them. And so that is going to be an added benefit for both SOFI as well as Galileo. And now moving on from crypto, Anthony Noto spoke about the potential of the loan platform business and how that is accretive to their overall business. Now we already know some of the common terms that SOFI like to use to describe the loan platform business. Things like capital light, low risk. These are things that we already know about the loan platform business. And I think really what people fail to understand beyond this is that this really opens up a whole new vertical of growth for SOFI that is currently, from what we can see, uncapped, right? So the reason why this is uncapped is that because if you understand the risk of SOFI's business initially, or the risk that some of the bears saw around SOFI's business initially, is that when you underwrite loans on your balance sheet, you're basically confined by how big your balance sheet is. However, with this, as long as SOFI can find partners to want to take on the loans outside of the credit box that they are operating in, then essentially their growth is untapped, because all they're doing is that they're receiving a small fee for helping someone else do their underwriting, right? And so with that, I think the additional benefit for SOFI, it's not just the fee that they receive. If they carry out, if they conduct the servicing of the loan, what happens is that this member that actually has their loan originated by SOFI but held on someone else's balance sheet will be within SOFI's ecosystem. And now SOFI has a new member that is outside of their credit box that will interact within SOFI's ecosystem using their other products, generating revenue for the business without SOFI having to take on additional balance sheet risk. And so to think about the market that is basically out there available for SOFI to go after, SOFI has essentially told us multiple times, and Anthony Noto again reiterated this during this fireside chat, that outside of SOFI's credit box, they decline over $100 billion worth of loan applicants. So like I said, if they can find other partners that are willing to take on some of these loan applicants, these $100 billion worth of loan applicants can come onto SOFI's platform, and they can receive a fee, around a 4% fee, on this $100 billion of loan applicants. Now, that is not to say I think that SOFI will underwrite the entirety of these $100 billion, but even if they can get 10, 15, even 20% of this $100 billion worth of loan applicants into their ecosystem and basically receive a fee from their partners, I think this is something that is going to be very bullish for the company. And it tells me that at least the growth in the financial services side of their business is nowhere near done. I think sometimes we see some of these numbers, 80%, 100% year-over-year growth. We wonder how long they can sustain that. Now, to be able to sustain this 80%, 100% year-over-year growth number, I would say that, they can't sustain that for very long. But can they sustain a long-term 30 to 40% year-over-year growth in their financial services aspect of the business? I would actually say at least through the end of the decade, I wouldn't be surprised based on the opportunity that is in front of them right now that they are able to do that, right? So you can actually see that, currently one of the ways that one of the advantages that SOFI has compared to companies like Upstart, who also run a similar business model, is that SOFI has the ability to originate a large amount of loans with one or two partners without severely risking their business. You see, with Upstart, because the loan platform business is their primary business, if they originate too much loan with any one particular partner, what happens is that during a recession or during an economic downturn, if the partner choose not to originate as much loans, that would be a direct hit to Upstart's revenue. However, SOFI is in a completely different position because the loan platform business is just one aspect of their financial services vertical, and the financial services vertical is just one vertical out of three other verticals that they have, right? Which is their lending platform, financial services, as well as the tech platform. So the loan platform business for SOFI, because it is just a small segment of their business, to me, it is actually fine that they are actually a little bit more concentrated in terms of their relationship with their partners. They have one partner where they're originating around $2 billion worth of loans, and another partner where they're originating over $5 billion worth of loans. Now, why this is good for SOFI is that because in a recession, Anthony Noto has told us that they're picking partners. SOFI are being very picky about who they have developed this relationship with, is that these partners that SOFI picks have to be able to sustain their asset management business through an economic recession, through a bad time, and they'll have capital to continue to invest over time. And that itself becomes protective for SOFI, right? So this is something that for SOFI, it's protective because they have a large enough business that, even having a concentrated customer pool within a small segment of your business is fine, because you have your lending, you have your tech platform, you have other aspects of financial services like SOFI Invest to basically offset the risk of having customer concentration in this one particular segment. However, for Upstart's case, I would be concerned about the customer concentration because that is their only main source of revenue. And if the customer actually leaves the platform or finds someone else to partner, then that will be a direct hit to their revenue. And so that is why this is something, to me, is a moat for SOFI. It allows them to concentrate into partners which they deem are safer. However, if Upstart were to do the same thing, that is actually going to be risky for Upstart because they don't have a business surrounding the loan platform revenue stream. Now, apart from that, I want to talk about the capital raise that SOFI did right after their Q2 2025 earnings. I think a lot of us expected that apart from using some of these capitals to pay down debt, I think we expected them to go out and acquire a crypto company, something that will enhance their crypto products. However, I think SOFI has chosen to actually build out crypto products on their own using Galileo, and where they actually see this acquisition is within the AI space. And so what Anthony Noto has said is that, by and large, as they started to grow their deposits, they are starting to see an increased amount of fraud, and they need better fraud detection, basically to give their customers a higher level of security and protection. So he's telling us that there are a ton of AI companies that are being built for the second order effects of SOFI's business. And so what happens as a byproduct of that is that it gives SOFI the chance to basically acquire some of these AI companies that are, primarily focused on fraud detection, primarily focused on account security, and integrate that into part of their tech platform, and then to offer that services out to other clients as well. So this is basically a way for them to increase their revenue streams through the tech platform, right? Because it gives them the ability to offer an additional service to their clients. So what is interesting is that I think this possibility to acquire a company is further down the line than many of us expect, because during the fireside chat with Goldman Sachs, he actually revealed that they just completed a proof of concept with a company around account takeover, and what they actually saw is that during the proof of concept, this increased the improvement of the account takeover resolution by 60%. Now, of course, he did caveat this by saying that this is what we have seen in the proof of concept. Once this is fully deployed, we may not see the same results, right? So he is giving a little bit of a caveat over there, but we can see that this process is further down the line than many of us thought. And this is not just something that they are thinking about, but something that they are actively working on, right? They're trying to improve security and safety for members on the platform. And I think that is very important, especially if they want to build that reputation as a bank people can trust, people feel safe to custody their assets with them. And I think for a while, I was a little bit concerned because I remember Anthony Noto making this statement that, with underwriting, you don't really need AI. However, other companies like Upstart are touting their AI as a way to do underwriting. Now, of course, if you look at the results, it has been proven so far that SOFI's way of underwriting is a lot more efficient than some of these other so-called AI companies that are using that for their underwriting. But I was worried, how SOFI is going to integrate AI into their business, into their ecosystem beyond just chatbots. And this is something that many investors miss because it is not an exciting aspect of their business. I mean, at the end of the day, if you think about it, it makes sense that, a bank needs to have the consumer's trust. And with the advent of AI and with how fast AI is advancing, I wouldn't be surprised that we see an increase in fraud committed because of AI. And, the hackers and all these people that are out to commit fraud are starting to use AI themselves to hack into people's bank accounts, to basically commit fraud and to commit account takeover, which is why for SOFI, it is important that they use AI on the back end as a defensive measure to protect their customers as well. And I think this is something that a lot of people miss as an investor, because as an investor, we tend to look at what is going to generate money for the company. This might not necessarily immediately be accretive to their revenue, but over the long run, it generates that kind of trust, it generates the kind of stability needed to develop a long-term relationship with a member. And finally, with regards to SOFI's tech platform, I think it's more of the same. I don't think we are expecting to see a large boost in tech platform revenue in 2025. However, he did say that the deals that we announced for next year in January were important wins for us, which means out of the 10 deals, I am presuming he would have closed most of that based on this statement, right? Which means that we are going to see 10 new relationships develop with partners that are going to generate revenue for them in 2026 that are not currently generating revenue in 2025. So they have told us that they have just recently launched one of those, and they have work to do to expand their relationship with their partners. And I think this is an important milestone for SOFI, because I think a lot of people are not sure whether or not how much credence do we give to SOFI's tech platform. And I think as we see that revenue come in 2026, it's going to be easier for us to actually extrapolate out the thesis for SOFI's tech platform. Now, to me, I think it's important to remember that, after Chime left SoFi's tech platform, or Galileo, let's call it Galileo, I think people were worried, or at least I was worried that, could there be a possibility that people are going out and just building out their own tech platform, and it's not really as hard as SoFi makes it out to be. However, from what we are seeing from some of the results, that doesn't really seem to be the case, because after Chime offboarded their clients, offboarded their accounts from Galileo, what we actually noticed is that the tech platform revenue per account is actually going up. And this really ties in with the narrative that the management has been telling us. They say the reason why the tech platform is growing the way it's growing is that because we are not positioning ourselves as the lowest cost solution. We're not positioning ourselves as the lowest price alternative. We're positioning ourselves as a premium option in a way that we can create a complex infrastructure. If what you are looking for is the best solution for your customers, then SoFi's Galileo is there for you. However, if you are looking for the cheapest solution, then we may not be the right fit. And so because of that, we are starting to see, we might have seen some customers actually left SoFi's platform. And I think now we are seeing the results of that. These customers that leave SoFi platform eventually lead to a higher revenue per account. That actually shows that, the management is taking the tech platform in the direction that they want to. And this is something that as an investor, you just got to give them time to let this thesis play out. And at the same time, with the tech platform, I think, like I said, it's the same old story. The bigger banks just need to get their act together and to get someone to approve some of these investments that they have to make in the tech platform space. And finally, this is something that I know a lot of investors have been asking for, level 1 options on SoFi. And I think, to me, the fact that they can delay level 1 options up to this point really shows me that SoFi and Robinhood are going after two different competitors. Now, why am I suddenly bringing this up? Because throughout the entire year, many people see these two companies as opposed to each other, going after the same clients. But the way I think about it is that there is no way the customer that Robinhood is going after will use an account that doesn't have level 1 options. However, SoFi is probably going after a different demographic of people, people with perhaps professional jobs that just want a simple ETF and a simple investment plan where they can set it and forget it, and they're not looking at level 1 options, which is why they're able to delay the launch of level 1 options until today without stunting the growth of their members. Now, if they did not release level 1 options and their member growth slowed down, then you can say that, perhaps SoFi's management misread their market and misunderstood what their consumer wants. However, what we're seeing is an increased growth in their member count every single quarter, even without level 1 options, which means it proves the point that level 1 options is not something that the typical SoFi customer wants. And this, at least to me, signifies that SoFi is going after a vastly different audience compared to Robinhood. And they are not really, although they're in the same space, they're competing from different audiences in the same space. Now, so let's get right into the valuation. I think most of you should be familiar with this Excel sheet. I think I've been taking my screenshots from here and editing this piece of Excel sheet over time. Now, with using StreamYard, I'm able to show you live how I actually think about things and how I actually made some edits to these Excel sheets. So what we are seeing over here is what we are focusing on, which is the performance of SoFi over the coming few quarters. However, if you look at the date today is actually 13th of September, and that means that, Q3 is coming to an end. Now, as of today, we haven't had any announcements about some of these crypto products that he's talking about. And so because of that, I think we see adoption of crypto products perhaps in Q4 of 2025 and in Q1 of 2026, where we see the largest bump in terms of products per member. So if you remember back in 2023, when they removed crypto from their entire ecosystem, we saw an immediate impact into the number, into the products per member number. That number actually fell. So it stands to reason that once they add their crypto products back into their ecosystem, we should start to see the products per member number rise. Now, using this number, that is how we are going to determine how many members will have to, in a sense, take on an additional product from SoFi in order to custody their crypto with them. So I just want to focus on the two statements that Anthony Noto makes over here, and basically to use his statements and work it out in terms of a numerical form, what he's actually talking about. Now, I don't think Anthony Noto at the back really did these calculations. I think he's giving us a ballpark, but rather than, just use 50% of the members outright, I want to see what exactly that means and to give a more realistic expectations. So I hope I'm going to explain this fairly clearly. Anthony Noto made two statements. Now, the first one, he says that 50% of existing members custody crypto. Now, like I said, because we are going into Q4, I think this 50% of existing members is likely going to be referred to the total number of members on their platform at the end of Q3 2025. That is likely going to be around, I would say, maybe 12.5 million new members, which means the 50% of 12.5, that means I need to do 0.5 times 12.5 million members. That gets you 6.25 million members, right? So 50% of SOFI's existing members want to custody their crypto on SOFI's platform, and this refers to this 6.2 million members over here. Now, the thing is, out of this 6.25 million members, there are two groups of SOFI members. One group of them with one existing product, which is likely to be a checking or savings account or some sort of loan with SOFI, and they would need to open a new account with SOFI Invest in order to custody their crypto with SOFI. And when they do that, it is additive to SOFI's overall number of products. However, the second group of SOFI members, which I have labeled them as Group B over here, are members on SOFI's platform currently with two products. Now, how did we get this number two? Because if you look at previous earnings presentations, SOFI has told us that a typical member would have around two products by now, right? So these two products, the assumption over here is that one of these two products is a SOFI Invest account. Now, could it be that one of these two products is a loan and the other is a savings account? Sure, but the assumption over here, trying to be conservative, is that any members with two products, one of them would be a SOFI Invest account. Now, this means that out of this 6.25 million members, we know that there's a group with one product. This group will need to definitely open a SOFI Invest account. And Group B, these members do not need to open a SOFI Invest account because the assumption is that when they have two products, SOFI Invest is one of the two products. So how are we going to find that out? That's very simple. You already know that currently SOFI's members tend to have on average 1.46 products per member. So if you take 1.46, you multiply that by 6.25 million, that's how you get 9.125 products on SOFI's platform generated by these 6.25 million members, right? So that's how you get the number of products. So how that actually works out is that members with one product, I will be basically taking one product multiplied by the number of members, which is A. And for members with two products, it's basically two products multiplied by the number of members. And using this, that's how you get 9.125 products on SOFI's platform from these 6.25 million members. So thereafter, in math, people call it simultaneous equations and whatever the name is. Very simply, what I want to do is I take 9.125 million minus 6.25 million. Now, how do I do that? Very simple. You can see these two equations. I can cancel out A, which is basically the same thing, and I cancel out B, and I cancel out B over here. So you can see A plus B equals to 6.25. So you can see A plus B equals to 6.25 million, and A plus 2B equals to 9.125 million. So the main difference, why is there around a 3 million difference in the final numbers over here? Why is this 6.25? Why is this 9.125? Is because in the second equation, there is an additional B that you see over here, which is why you can cancel this out. Okay, this additional B. So because of this additional B, that explains the 3 million difference over here. Now, what is B? We already told you earlier, B is number of members with two products. And this means, out of the 6.25 million members, 2.8 million members have two products, and 3.3 million, close to 3.4 million members operate with only one product. Okay, so this means what this tells us is that this is how I get to the number where I'm using 3.4 million members having to open a SOFI Invest account I think the maximum number of SOFI Invest accounts will be added onto the platform will be 3.4 million, right? Because these members will then have to open a SOFI Invest account. Now, out of the new members, this is a lot more straightforward. Anthony Noto said 60% of non-members want to custody their crypto with SOFI. Now, the assumption over here is that 60% of whatever new members that are being added. Now, I think this number is inaccurate. 861 is actually my, let's take a look. Yes, 861 million members is my Q3 number. My Q4 number is around 913. So I'm going to use that. Now, this number is not my exact prediction for the members in that particular quarter. Like I said, I'll do a more dedicated earnings review closer to the date of the earnings. These are just some assumptions that I've been playing around with previously to understand the valuation of SOFI. So I'm just using this for now. So if let's say 60% of this number, 0.6 times this, you have around 547,000 new members will be opening a SOFI Invest account with SOFI. Now, I am presuming that some of these new members that come in, not the entire, because this is a sample size, right? When he says 60% of new members want to custody their crypto with a licensed national bank, it doesn't mean that 60% of all the new members come in always want to do that. So the assumption over here is that we're going to use 40% instead of 60%, right? So what this means is that perhaps they come in through a loan and then they open up a SOFI Invest platform, whatever the case is. 365,000 new members use SOFI Invest as a platform. That's how I look at it. So with this in mind, okay, let's go back here. Now in Q3, there will not be any difference, 1.46 products per member. In Q4, I am also going to assume the same thing, 1.46 products per member in Q4. I'm going to manually add in the 3.4 million members. Now, instead of 3.4 million members, I'm just going to use 3 million members over here. If you take a look at the formula bar at the top, I'm just adding 3 million members. Why am I doing that? Because I am going to say that is the maximum number that we are expecting. However, I would say that perhaps you can see adoption in the high 80% range, which is basically, the kind of adoption that we are seeing for SOFI Plus right now in the close to 90%, right? And then on top of that, there is 0.4, which is 40% of the new members are also going to be using SOFI Invest products, which means that apart from the normal product that they have, they'll have one additional product, which is SOFI Invest. So using this, we see a huge jump in terms of the products number, right? And how this is going to affect their valuation. Now, in Q3 and Q4, the assumption is that SOFI will reach around 12% of net income margin because they did 11.3% last quarter. And if you bear in mind, SOFI also did a capital raise, which is why we are accounting for this $31.86 million over here. Now, if you remember, initially during I think 2 videos ago, I was talking about how this 31.86 million number came about. If SOFI were to pay down the debt, this $31.86 million would be their interest savings over the next 5 months. However, we have just heard from Anthony Noto that they are in talks to potentially make another acquisition or two that can be additive to their tech platform, which stands to reason that they will not be spending the entirety of their capital raise on paying down debt, which means that they will not save the entirety of this $31 million, and they're likely only going to save about $15 million. So if that's the case, what I've done is that in 2025, you can see in the top over here where there's the formula, I have added $15 million to the overall net income in 2025, right? Once you do that, you get a net income margin of around 12.7%, which is more or less in line with what they have been performing in the last couple of quarters. And I think from there, you get an additional 4% shares outstanding dilution. You end up with earnings per share of 40 cents. Now, if you look at where some of these companies like Robinhood were trading previously when they just turned profitable, I would say that, especially if the market conditions continue to be favorable, continue to be good, we get a rally towards the end of the year because the markets are excited about the upcoming rate cuts, then I wouldn't be surprised to see valuations continue to rise and for SOFI to be trading at around 90 times PE. Now, and that means over here, you can see with this, at 90 times PE and a 40 cents EPS, you get a price target of around $35.61. Now, why is this $35.61 and not just outright $36? It's likely because this number over here, like I was saying, what we're seeing is 40 cents EPS, but if you break it down even further, it's like 39.6 cents, which is what explains the discrepancy. And so with that, I would say that, if SOFI adds back crypto into their ecosystem before the end of the year, it is likely that we can see a price closer to the mid $30 range at around $35.61. However, if you think that the rollout will be a little bit more gradual, then perhaps the addition will not be so drastic. So for example, if you assume 1.6 million members added instead of 3 million and the same 40% of new members using the platform, you end up with a number closer to $35. So it's not that big a difference. And if you lower this a little bit more to 80 times PE, perhaps it might be a little bit more palatable for some of you. Then you can see SOFI still end the year at $31.11. However, for me previously, I've already said that my end of year prediction for SOFI is in the $30 range. And so that's why, to me, I think it is feasible that seeing how fast the removal of crypto affected their products number, I'm also pretty confident that the addition of crypto will also affect this products number, which will be accretive to revenue and increase their profitability. Therefore, I'm saying that if we do see a launch of crypto in Q4, especially in the early part of Q4, then it is likely that we will see SOFI end Q4 of 2025 in the mid $30 range. I would say perhaps $33 to $35 range, right? I think that would be rather fair for them if they launch crypto in the early part of Q4, right? Because you have the entire quarter to have an adoption. So I just want to be very clear. The expectation over here is $33, $35 at the end of Q4. Now, at the end of Q4, a lot of people will think that it's December 31st, but it is very hard for us to predict what's going to happen on December 31st. This $33 to $35 that I am expecting is once they announce their Q4 results, because only then, with the data from the crypto, can the market actually price it in. And so with that said, I think that's all that we have to understand around SOFI's business up to now. And I'll do a more detailed video around their valuation and to really scrutinize all the numbers when it comes closer to their Q3 2025 earnings. And with that, I'll see you in the next one.